Hi there, this is Tyler Braun with the Tranel Financial Group. I hope you guys are having a great day. I just wanted to take a few minutes and talk about the market, right? We've seen an immense amount of volatility since the beginning of the year, mainly driven by the COVID pandemic. But really, there's been huge movements throughout the past few months. So just want to take this time, go over the market, how it's performed year to date, take a step back, look at it even a little bit further to bring some perspective to it, and then talk about some of the key factors that we're looking at going forward. So bear with me here while I share my screen. So this is the Dow Jones over the last 1 year. And you can see the sell-off that occurred, right? At the beginning of this year, just to give you a perspective, on January 3rd, the Dow was at approximately 28,600. So we started this year over 28,000 in the Dow. Right now, we just got over 25,000. So we're still down about 3,000 points from where we started at the beginning of the year. To look at that even further, the market had approached all-time highs before going into this sell-off, which heightens the volatility, right? We signed the phase one trade deal in early January, which brought a positive momentum to the market, and the Dow was approaching 30,000. You can see on February 12th, right, the Dow was as high as 29,551. Within a 3.5 week time period, the market actually declined all the way down to 18,500, right, on March 23rd. So to give you some perspective on how far of a decline that happened, right, in 2015, the market was trading at approximately 18,000. So we wiped out 5 years worth of gains in a matter of 3.5 weeks. Anytime you see lines that are straight down like this, it's typically fear generated. And it's one of those things where you really have to manage the emotion, right? As investors, our biggest hurdle or obstacle to success is ourselves, right? Letting our emotions dictate decisions for us, even when they're not logical, right? The pain of losing money always outweighs the high or the euphoria of gaining it. So it's one of those things you have to remove yourself from the emotion, but in a 3.5 week time period to see over a 30% sell-off, that's a huge, huge swing in the market. On a positive note, right, as the economy has started to reopen and phase in businesses again, what we're seeing is an uptick in production, which means we're seeing gains out of the market, right? We were as low as 18.5 on March 23rd. And you can see as of today, right, we're at approximately 25.5. So that's a 7,000 point swing over the past 2 months. So that's where you don't let your emotions take over, right? If you would have sold out at 18.5, you would never have gotten back to 25.5. If you sell at 25, you don't get to 28. So you can't let the emotions of the market dictate what your goals are. That's just assessing your plan and ultimately how you're going to draw income in the future. Totally different conversation. In addition to this, right, what we look at are key factors going forward. And that's what we have to pay attention to, right? What key factors are out there going forward that we need to look at? And the 4 that I want to talk about today are government, international pressure, which would be China, just the new expectation, and then supply and demand, right? So in terms of government, I'm not here to talk about the election. I don't want to get into politics. Really, it's the CARES Act. So the government put forth a $3 trillion spending bill, right, a stimulus bill, to help build a foundation for the U.S. economy. So what they did is they basically said, we're shutting down the U.S. economy, and we're going to build a foundation that says we're here to help pick it back up. And that's what the CARES Act is there for. That's helped us gain momentum in the market over the past few months. They're infusing over $3 trillion in assets into it, right? And they're basically saying we want to reduce this pain as much as possible. From an international pressure, we hear China in the news quite a bit. And we have to continue to pay attention to that, right? There's rumors out there where ultimately China is not fulfilling all of the phase one trade deal obligations. Hong Kong has become more and more at the forefront of the news. So there's different pieces that we're trying to work out in terms of the United States and China, but obviously we're butting heads, right? Anytime you hear the term Cold War brought up in a conversation, it's extremely scary. So it's something that we need to pay attention to, and we are. But ultimately, China is a big international pressure going forward. Realigning expectation. Remember, previous to this, we were at all-time highs. February, we were almost to 30,000 in the Dow. The expectation was growth. We need to reevaluate expectations for certain companies, right? On the other side of this, the world will be a different place. So make sure you're reevaluating your expectations for not only the companies that you own, but what those companies will be doing in the future. And then the third is supply and demand, right? Right now, there is pent-up demand amongst consumers, right? I have 2 kids and a wife. We've all been quarantining at home. And ultimately, there is a demand for us to go do things. We just don't feel necessarily safe to go out and about yet with the COVID pandemic still in place. So when we look at these things, as long as that pent-up demand is there, one of the huge driving forces of the economy is consumer spending. As the economy continues to reopen and people are allowed to start to get out and about and they're starting to spend the money, that will also help uptick the markets for the long term. So stay the course. I hope you guys enjoyed this update. The market's been doing very well since March 23rd, as I showed you previously, but really we've seen an immense amount of volatility even from the beginning of the year. And we need to just continue to monitor going forward. If you have any questions, please feel free to reach out to us directly. That's what we're here for. I'm glad to go further in detail with you. Otherwise, I hope you guys have a great rest of your day, and thanks for listening to the webinar. Thank you.